Hey Armando, this is Ryan with TrendLizard.com. Hey, thanks for sending me the other ticker on XME, the metals and mining ETF. Really interesting, as you know. So let's dive right in, starting long term and moving in from there. So here is all data we have dating back to its inception back in 2006. There's a little bit of up and down swings in the early going here. A big decline in 2008, and then a really nice advance off the 2008 low into the 2011 high. Since then, it's been in a really steady decline, as you know, lasting 4 or 5 years until the start of 2016, where this guy has just really taken off to the upside. So it's still pretty early, even though it's nearly doubled its value over the last couple months. But it looks pretty darn bullish, I would have to say. The decline off the 2011 into the 2016, the 2011 high into the 2016 low looks like one big counter trend move. Even though it completely decimated the value of this ETF, it still looks like one big counter trend move that may very well be over. So let's zoom in on more recent action and take a look. So this is the focus on the 2011, the decline off the 2011 high into the 2016 low. Counter trend moves are three-wave moves as labeled A, B, and C. This looks like one big three-wave counter trend move. This really sharp advance has emerged off here and seems to really have a ton of potential to be an important low and the start of a long-term uptrend. So let's keep moving in. Let's look more at the advance off the 2016 low. Here it is. This has the potential to be a trendy move, no doubt about it. The problem with moves that are this quick is it's pretty hard to find any really proximate levels that you can use to protect your investment or your trade. So here, it would take a reversal down from 20 down back below 16 to indicate that this is something other than the start of a new uptrend. So that's obviously a pretty far decline. I mean, you're talking about a 20% loss before it hits here. But unfortunately, with a move this quick, that's kind of how it works. So it's bullish. We think it's going to continue higher. Unfortunately, the closest level that you could physically put on a chart to say it cannot break this level is 16. So that's the level to watch to the downside. I'm going to step out one level here. A move above 31, which again is pretty far away, is required to confirm with absolute certainty that this decline is over and that the uptrend is resumed. So again, it's pretty far away. Doesn't make it as useful as it would be otherwise, but that's where the level is. So two different ways you can approach this. You could be bullish right now and you could put your stop at 16, or you could let this develop a little bit more, wait till a larger pullback emerges, and then that's going to give you a better stop level to use once the uptrend resumes from there. So I think those are probably your two best options here. I would be bullish on it. I wish I had a closer level for you than 16, but unfortunately that's where it's at right now. But it does look bullish and the future looks pretty bright. So I hope that's helpful, Armando. Have a wonderful evening and we will talk to you soon.